Hey, good morning everyone, and welcome to the PivotBoss pre-market report for Friday, June 8th, 2018. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Real quickly here, you'll notice a new color scheme. Per viewer recommendation, I have changed the colors to make it easier to see, so thank you for the recommendation. Additionally, we're also going to be incorporating new futures contracts into our pre-market reports and throughout the summer and into the fall. So again, that is per viewer recommendation, so thank you for that. If you have any other recommendations, please let me know, and I'll look to gladly incorporate those into what we do. Additionally, for those of you who'd like to get together again for another monthly market outlook, please join me this afternoon at 3 o'clock p.m. Central. We'll be hosting another monthly market outlook, and I'll tweet that out as well. The same link from last week. The recording last week did not turn out, so I wanted to do another round. So we'll get together this afternoon at 3 o'clock. Additionally, for those of you waiting for Swing Trade Pro 2.0, we'll likely be hosting an open house to get a sneak peek at it sometime in the next week, and Swing Trade Pro will be available right at that time. So we're going to be working very quickly to get that out the door. Additionally, for those of you who are premium members, please let me know what you think about our new options trade alerts. So far, they have been well received, and I'm up pretty nicely so far on some of these trades this week. So it's a new approach that we are offering in terms of trade notifications to our members, and we're looking to expand that here throughout the summer and into the fall. So please let me know what you think. Alright, here's a look real quickly at the ES. You can see right here a failed new low below the previous session's low. That is what's developing. The failed new low is at 27.60 right now. ES is above intraday VWAP and testing right at around the current day's mid. So if price can continue to hold 27.60, we likely see a continuation, perhaps to new highs throughout the rest of the session. And a failed new low in an uptrend is indicative of further overall uptrending behavior. So again, that suggests that we could be looking at a move and a continuation toward our target zone up above between 2800 and 2830. So more upside as long as price continues to hold 27.60. Taking a look now at the NQ. Right here you'll notice that price has pulled back, and we've gotten just below the 8-period moving average, which is the gold moving average here, after the break to the upside. This is typically very, very bullish, especially if bulls come in to defend. And you can see all throughout this move, they defended every single day, closed it back above it, except for one day where it didn't close back above. So this is a very, very important moving average here, where when it gets below that zone, in the trigger zone, in a very healthy trend, you do not tend to see price stay below that moving average for long. So that's right at the 7100 level after the upside break. So again, we could be looking at another drive higher that takes this thing through recent highs and pushes it into 7300, and from there that's the lower end of our target zone on a swing basis here. So we'll keep an eye on that right there. Any failure to hold 7100 right now could rotate this thing all the way back to 7K, and again, given the breakout through 7K, any return to 7K still likely to be defended by bulls given the current trajectory of this market. So right now 7100 very, very important. Short term, keep an eye on the previous session's low 7116. Here's a look at the YM. The YM here, very nice key range that we've developed from here on down. Now that move, that sell-off right there, gave us a great key range, and you can see how we've mainly stayed within the middle 50% of that range for the most part. We've gotten down a little bit lower and hit an FOMC key level from November, but for the most part we've stayed right in the middle. Here recently we took the mid 24,886 bid significantly, and we're now holding above the previous month's high. So that is very important. If there's any failure to hold that level, we rotate down back toward the previous month's close. If we can stay above that zone, or if there's a failed new low that happens below it, that could catapult us higher and keep us going toward the next target up, which is 25,785. That's this recent high It's the inner 25%. We're getting a move away from the middle, which would suggest that we would come up toward that level. Now once we do come to that zone, again the expectation would be likely a fade back to the midpoint, because once we get too far away from the mid here, we usually come back. We get too far away, we come back, right? And so if this thing gets out into this zone, we could be looking at a fade right back. So right now the idea is look to defend pullbacks for a continuation into 25,785, and then once we get up there, look for signs of rejection that'll bring us back to 24,886. Okay, taking a look now at crude oil. You'll notice right here that crude oil has formed kind of a rounded bottom on an intraday basis. 66 to 66.29 is kind of the major area of resistance, and right now we are holding off the midpoint of the previous session's range and also the previous session's closing value, and all of this could lead to a major squeeze ahead. We have a very clear little box that is formed on the intraday time frame from 65.44 to 65.80, and outside of that range sparks the next short-term move. If it's to the upside, it could also power a move through resistance here, and again that could spark a stop run day. So basically a stop run day would be where price runs through recent highs and just continues onward throughout the entire day, running stops in that direction. And so that's the type of day that could develop here if price can continue to hold the midpoint of the previous session and starts to get a push through these highs. So right now that's the idea. We do have the potential for rejection as well. So say we were to break higher and then by the end of the day we're back below resistance, that would be a big indication that we're probably about to get another leg down. So right now we're very, very clear inflection point in the charts. Keep an eye on that intraday consolidation, and any breakthrough 65.80 could start to work this thing higher. So we'll keep an eye on that as it develops. Lastly, taking a look at gold. You'll notice right here that gold continues to chop around a key level. So right here you'll notice that that's the previous key range low right there, and that is 1309. 1306.60 is this FOMC key level, and we are chopping and coiling right below those levels. And so this is a very clear point here where it's chopping around 1300, and that's the pivot. It's straddling that pivot. We could either make a move higher and get back above 1309, and if that break occurs, then odds increase that we will hit 1337, and if we hit 1337, odds increase that we will get the 1360s as well, just like we've seen in the past. So this is significant, and it would be a very quick move. It doesn't have to take long. It could be 5 days and we could be there, similar to what happened back here. 1, 2, 3, 4, 5 days back here after the rejection. 1, 2, 3, 4, 5 days, 6 days, and it hits a high. So it could definitely get there. If there's a breakdown below, say 1290, then perhaps the bears have won out and we're about to see another leg down similar to this move here. That would start getting us down toward about 1252. So right now, straddling 1300, building energy. Above 1309, 1310 will really start to squeeze this thing. That could get very exciting with clear targets up above. If it breaks down below, we can have a pretty quick 2 to 3 day sell-off. So got a tight range to watch between 1310 rather, and 1290. All right, that is all for today. Thank you so much for hanging out with me, and have a fantastic Friday as we head into the weekend. Take care, and I'll see you soon.